all of the things that the Chinese government is dealing with right now, it's certainly got its hands full. But in terms of the impact from the trade war, what is the most immediate threat, in your view, to the Chinese economy? Is it the impact specifically of tariffs? Is it currency and potentially losing control of that? What is it in your view?
Well, in my view, I think it's going to be the strain that it's going to cause in the Chinese manufacturing sector. It's probably really feeling pain. At this point, real-time data on how the manufacturing firms are performing, on the labor market situation in the manufacturing sector, that's actually really hard to come by from China on a regular basis. But there's definitely feeling those strains, and definitely there would be concerns that this could spill over. When factory orders evaporate, manufacturing firms have to close down. It's often accompanied by layoffs or workers being asked to go on wage arrears, essentially being asked to work without pay. And that's not a great situation to have on the ground.
Are there things that the Chinese government can do to offset some of the pain felt in the manufacturing sector? I mean, today there are reports that in Shanghai there could be tax cuts. And that the Chinese government is planning other free trade zones around China. Could that help offset the pain that it's feeling in terms of manufacturing jobs potentially leaving?
Oh, absolutely. I think the Chinese government is going to do whatever it can to try to cushion the blow. The trade war between the U.S. and China, the tit for tat in terms of tariffs, has been grabbing all the headlines. What the Chinese have been doing in the background has actually been to lower the tariffs that they are charging to non-U.S. exporters. So basically, U.S. exports to China have declined. Exports from Canada and Germany to China, those have been going up to step in and fill that void. So they're doing whatever they can to cushion this blow.
Zach, what's your take on the impact on the U.S. economy? A lot of economists out there will say it's this percentage of tariffs on this dollar amount of goods, and that's the impact. But what we've seen so far is that the impact has been also on business spending, on confidence, et cetera, other measures that may not be hard measures in the U.S. economy.
Well, that's right. I think a lot of people have felt that the first $250 billion in tariffs actually hasn't had the effect that they expected. But I think this last $300 billion is going to be much more important. It's going to affect consumers much more directly. And so I think we should expect to see some real concern among the consumers over the next few months. This is why the president's team didn't want to put these tariffs in place before the holidays.
We've heard so many companies, though, already say that consumers won't pay a price increase for the goods. And so isn't it really corporate America that will bear the brunt? And if that's the case, is that less of a blow to the U.S. economy than if the consumers actually paid? Or does it not matter?
That might be right, but I think, look, the president is quite worried about what happens with the stock market. You can see it in just the fact that he announces the tariffs on a Friday night and then backs off of them before Monday morning when the markets opened last week. So I think the president, the White House, they're watching the stock market just as much as they're watching consumer confidence. And so even if it's just companies that bear the brunt, there's still going to be some real blowback here in Washington.
Can the president be the backstop to the economy then?
Well, he's probably the source of a lot of angst, I think, to start with. I mean, at this point, he's pushing and pushing and pushing, and the stock market hasn't broken. I mean, it threatens to break. But that remains the big threat. I mean, I agree that, these tariffs on their own are still pretty small as a percent of the economy. There's the question of what's the direct effect on the economy.
Right.
And this is a tax on the U.S. consumer, but you're talking 0.2% of GDP from the round that comes this weekend. So it's not a devastating blow. But the question is on the indirect side. But, so far it's not been devastating, and the stock market is holding near its high. But obviously we are vulnerable here.